In money matters, the rand remained unchanged in early trade. The local currency has been under pressure this week and is once again flirting with the 19 rand to the dollar mark. Grant Nader is with Benguela Global Fund Managers, and he joins us now to take a look at this and other business news. Grant, thank you very much for your time. So the rand is marginally firmer, but still trading dangerously close to that 19 rand mark. Pray tell what's going on.
Yes, I think we need to remember we had a nice recovery in the rand earlier on in the month, or last month, down to the low 18s, but it's given back all of those gains. Remember that we still have a lot of internal challenges that we're dealing with. We've got a sharp reminder of that with our GDP a couple of days ago. And so you add to that a dollar strength. The dollar was weakening and the rand benefited from that. But the last 2 weeks, we've seen the dollar take back some of those gains or some of those losses. And that's also put pressure on the rand. But I have to say it is holding well below 19, and psychologically it's an important level. The important thing as well is if you look at our long-term yields on the 10-year bonds, those are also holding well onto some of their gains down to below 10%. And that's very important. It's a good sentiment indicator. And it moves more slowly than the rand. So it's not all doom and gloom. Hopefully the rand can hold on to these gains. But all eyes on the Fed speak and the Fed next week and the jobs data tomorrow in the US to determine the next big move from here.
Sure. Grant, when you say the rand is psychologically at a good level, what does that mean?
Well, so my perspective is, given all the challenges we have, given the concerns around this practically being in a recession, we've got a very, we've got the load shedding, the Transnet, we've got a lot of issues we're dealing with, and it's very hard to see things getting materially worse from here. Yes, they may not improve rapidly, but if they start to improve, that's positive at the margin. And if we see some global improvement, and when I talk about improvement, I'm not talking about the economies, I'm talking about the potential for economies to recover. If we start seeing some rate cuts get closer to on the table, we're starting to see the market, especially globally in the US, looking at rate cuts as early as March. I'm not saying it necessarily happened, but what that does, it creates a positive outlook. It improves the attractiveness of the rand, and potentially commodities can benefit from that. And that obviously will feed through into the rand. So we're at a challenging position, but there is potential from here for things to be better rather than worse.
Okay. South Africa's foreign exchange reserves increased to over $61 billion in November. What does the data tell us about the health of our foreign purse?
So that is an interesting one, and I think it's good to see that foreign currency reserve increase. It's the first time since July. We built up some nice reserves during that post-COVID squeeze in commodities. We had a really cash flush couple of year from the commodity side, some strong revenue generation, and we've obviously seen a lot of that disappear, the PGM basket in particular. But what we have seen is the strong gold price over the last month in this quarter and the last while has driven some renewed income and some better reserves. So there's something to be taken out of that. It's unclear as to whether it's sustainable from here. The basket is mixed in terms of our commodity basket. Really, what we need to see is some PGM recovery. That would make a huge difference. But we'll take what we can get, and that's at least a better picture from the last few months that we've seen.
All right. The country's current account deficit narrowed sharply to 19.3 billion rand in the third quarter of 2023. Help us make sense of the factors influencing trade there.
Yeah, this is one of those that it looks good on paper, but perhaps it's not as certain. The June quarter, 185 billion. It came in at 19 billion now in this most recent update, and that optically is very good. It just means we're the balance between exports and imports has improved. But the question is, what has driven that improvement? And it looks like it's actually a drop in imports, as well as there's been a marginal increase in exports, which is obviously something we want to see. But a lot of it has been a drop in imports, and that tells you how this economy is under pressure, how demand in this economy is under pressure. And that's obviously a function of the rate hikes and the pressures we're seeing around a slowing economy for many factors that we've talked about already. So it's positive in some respects, but on balance, there are some signs of concern in that. So it is a two-way street in terms of how we look at it.
Sure. British American Tobacco plans to write down the value of its US cigarette brands by £25 billion. What's going on?
Yeah, this is very unfortunate, and we've seen a number of these big. This is a good warning sign to investors. Beware of large deals. This actually goes back to in 2017, BTI and Reynolds Tobacco, the US tobacco giant, did a deal. They did a merger for which British American Tobacco paid $49 billion, and they accumulated some really good brands, the Camels of the world, and with a view that over the next 20, 30, even 40 years, they'd be reaping long-term benefits. And what they've had to do here is write down the kind of revenue they think. They've written down those assets it's about $31 billion or 25 billion pounds. And it tells you that they didn't, it's only 6 years ago. So they really didn't see the challenges coming. And it's these new age products, the non-combustibles, the likes of the vapes of the world that are really challenging this market. And if you look around you look at the youth of today, every single one of them is using vape and none of them are smoking. So I think the take-up is happening far quicker than expected. And of course, these products are still not yet at profitability stage. So some of the big tobacco makers, they are participating there. British American Tobacco is one of them. But they're not yet at a stage where they are highly profitable. I think they will get there. But the old brands are losing out far quicker than the new brands are showing opportunity and are actually monetizing. And then you add to that, there are a lot of challenges. So the big traditionals don't dominate this market as much as they used to dominate the old traditional cigarette market. And so there's a bit more competition, and that's also hurting. And so they're going to have some choppy waters, but they are doing quite well in the new brands, and we've seen them bring forward the timeline to profitability in this new area of non-combustibles. So we'll see how this plays out, but it's a very disappointing write-down. I mean, it does talk to them ultimately overpaying and really not having a good line of sight on the industry that is their lifeblood, in which they expected things to benefit for many more years than is actually playing out.
Grant, what does writing down value mean?
So when they acquire these assets or they buy a business, the price you pay, you don't expense it immediately. You put it on the balance sheet and you call it an intangible asset. So you bought brands that you think are going to sell for many years into the future. They're going to bring in revenue. And so you hold that as an asset on your balance sheet. And over time, perhaps you can depreciate that or let some of that go through your income statement as and when the brand starts to deteriorate. A really good brand, if you think of Coca-Cola, that hasn't really deteriorated in 100 years. If anything, it's improved. So that sits on the balance sheet as an asset, but it's only an asset if it can bring you value in the future. What the write-down tells you is the value that this number on the balance sheet, this asset, is actually not what you think it is. And it actually tells you the future earnings are actually a lot lower than what was expected. So you then say, this asset's not worth 49 billion, it's only worth 20 billion or 14 billion. And so you write it down to what is a fair number for the future expected income you can make from this asset. And when you see a write-down of this size, it talks to significant impairment in the outlook for the business.
Sure. You mentioned the entrance of new age gadgets in this space, but when you take a look at the entrance of legislation, there was a country recently, the name escapes me, but they introduced a law to ban smoking, and then they had to reverse that. And so when you take a look at legislation, how much of a factor is that as well?
You're right. Legislation is a big factor because they've been working for many years to legislate against cigarettes. We've seen the advertising diminish. We've seen restrictions on ages and many other restrictions and taxes, aggressive taxes. But what's happened is the new products, the new non-combustibles, have actually, a lot of them have slipped through the cracks. They started out with the flavored products, and those are still legal in many countries. That is being banned in certain places because the argument is it's really a gateway. So you make it taste great, really colors, nice flavors, and then the youngsters at 15, 16 years old see this as almost like a gimmick or a sweet, and it actually then creates that lifelong addiction. And so the legislation has been behind the curve on some of the newer products because it's a slow-moving machinery. These companies spend years tying them up in court, arguing with the commissions, the pros and cons, right? Doing studies, and so it's a long, slow-turning process. And by the time they wake up to probably what regulations are really needed, and we saw the same with cigarettes, actually, for that matter. I think the horse is bolted. You just have to look at the prevalence of these new products among the youngsters. Sure. So it's playing out in both sides. cigarettes are being more highly regulated, and the new products are not being regulated enough for where they are in the cycle.
Got you. It's down under in New Zealand that they actually reversed that ban on smoking in public. Thank you very much. Grant Nader is with Benguela Global Fund Managers.